Hi guys, Joseph from Intellect Finance. Today we'll be talking with Charbel from Kelly Partners about using different structures to purchase property and the benefits of using them. Charbel, appreciate your time. Thanks for coming in again.
No worries, Joe. Good to be here.
So what I would like to talk to you about today is using different structures to purchase property. So how people can purchase property using different structures.
Okay. Well, at the moment, Joe, I'm having lots of conversations with clients, mainly around probably trusts, and the big one is also superannuation. But with superannuation, you do need to go and seek financial advice initially before we sort of start any sort of process. So with trusts, ultimately it actually depends on really the client's circumstances. Typically I do go for a trust structure with property ownership, but ideally it's actually, I sort of like to sit down with the client and actually really work out their circumstances. If, for example, the property is negatively geared and that means it's losing money, a trust actually traps those losses and we can't actually disperse them within to the beneficiaries. There's land tax considerations as well. Trust actually doesn't receive a land tax threshold, so you have to sort of weigh up whether the individuals, the beneficiaries actually receiving a land tax threshold or utilising a land tax threshold. So that's important. The trust is very effective in terms of if there's a positive cash flow or profit in a trust. It's very effective in terms of utilising adult beneficiaries or potential beneficiaries with the trust to minimise tax.
We have previously done a YouTube video on superannuation, using your superannuation to purchase property. But yeah, if you could tell us more about the benefits.
So you have to chat to a broker initially, and then what they do is typically work out if your super balance is high enough to basically cover the deposit and transactional costs. And in terms of serviceability, what they'll consider is things like the rent on the property and also your super contributions going into the super fund that will actually service the loan.
A lot of people don't know that, I like to say self-employed people, that you can actually purchase the property that you're working from and actually lease it back to your company.
Correct. Everything has to be done at arm's length, but that is a very typical scenario with clients. So they would purchase a property that they're trading the operating business from and utilize their super to purchase, take out a loan, then obviously pay their contributions and the rent into the super fund to service the loan.
That was very interesting. Thank you, Charbel. There was a lot of good advantages and disadvantages in using your super to purchase property and for trusts as well.
Right.
Thank you very much for your time, Charbel.
Thanks, Joe.
That was very insightful. If you are interested to know more about using your super or a trust to purchase property, I'll put Charbel's details below, and of course, we can help you in financing the transaction with our experienced team. So I'll also put a link for our services.